Welcome guys to an updated video on Tesla. This is Buy and Hold and I am Thick Teddy. I want to say thank you guys all for tuning into this. Drop a like on this video if these help you guys out. Comment below what stock you want to see me do a buy and hold video on, and subscribe to the channel guys. So let's get into Tesla and an update. The reason I'm updating on this is because the move since my video has been so massive. I wanted to give you guys an updated technical analysis and why the move has been so bearish since the video I made. The video I made, I was very bearish on Tesla. I wanted to see $100 or a little bit above. I think it might have been, 115, something like that. I wanted to see near $100 before I was going to begin scaling in. And now we're seeing $112 as we speak. And I'm going to show you guys the video. The video that I had, that I made, it was at $187 per share. And now we're at $112 per share. So you guys can see the move that I was talking about occurred almost directly after the video I made. So I need some updated zones. So let's talk technical wise on Tesla here. What zones I'm interested in moving forward. I'm moving them down a little bit because I see SPY right now where it's at in the 380s, and I think there's a bit more downside on SPY, and the downside on SPY would be dragging Tesla down alongside it. And I think that SPY could see 330 to 300 in 2023. That's my opinion. And so I think, which worries me a bit for scaling into long-term stuff, I think that Tesla needs some more downside. There could be a pullback soon. We could see 140, something like that. A pullback on this downside that we're seeing on Tesla. But in the end, I think SPY is going to drop down to 330 to 300, and I think it's going to pull Tesla down as well. So here are my 4 buy zones on Tesla that I updated from last video. The first one is $92 to $90. I like that because of this support that was back in 2020. The second one is $82 to $80. And I like that one because it's just $10 down. You're not losing, too much, but you're also giving yourself a chance to let the stock move down more before you're buying a second leg. The third one is $72 to $70. I like that because, again, it's $10 down in the top of these candles here, and I think it's a good spot to get that third leg in. And the fourth one, which I'm not sure if it's going to hit or not, is $61 to $60. And all of these coincide with this large volume shelf below, because I think it could be very likely that Tesla comes down and bounces right off the top of that volume shelf. And that would be the most likely outcome for the real reversal of Tesla, would be off of this volume shelf. And so getting in finally at that 60 level could be a great spot for it to, come down and bounce right off of 60 or bounce right off of 55 or even 50. Those would be the great spots for buying Tesla, in my opinion, on this weekly. You guys can see these candles have been absolutely, daunting here. 2 massive red candles, and I think that we're gonna get into why those happen. But you guys can see this one from the week of the 12th closed at new low, and that is terrible. And look at the volume on that as well. New low on the volume, it's massive. And then you guys can see the size of this second red candle here. It's just massive. Like, this is just a great selling example of large money selling their shares. And so let's just talk about this for a second. This is the elephant in the room. The reason that Tesla is dying this quickly and this, I guess, massively and in the public eye, is Elon Musk is selling large parts of his Tesla position. And why is he doing that? I think because he needs cash for this Twitter deal and, paying back loans and stuff like that. I think that's why he's selling. But he sold $23 billion worth of Tesla this year, after he pledged in April to stop selling shares. I don't even know what to tell you guys. He's selling because he knew that things were coming. I believe he knew his company was a bit overvalued, and we'll get into valuation a little bit later in this video, but he knew his company was overvalued. He started selling shares, and he sold a massive amount. I believe last week he sold a great deal, and then this news came out yesterday. They suspended the production at a Shanghai plant. That is never good. That is never good. That'll impact earning reports next quarter, the quarter after. It'll impact a lot of their numbers moving forward. And I think Elon was probably selling knowing that was coming. He probably knows this recession he can't get through without laying some people off, selling his shares, getting cash. He knows his company is going to need to, kind of turtle up, if you might call it, that sort of thing, moving forward in this recession. And so you guys can see that this was pretty big news that he was shutting down a Shanghai plant. Part of it was COVID. But part of it I think was probably cutting costs a little bit. And he also is in very, very deep in that Twitter acquisition. And I think he's probably, that's why he's selling as well. You can see how much he sold this year. He needed a lot of money for the Twitter acquisition. He couldn't get it all. He leveraged himself in Tesla. Now he's trying to save his butt a little bit before the downside comes. And we're seeing the downside. So again, I want to drop these here for you guys just so you guys can have, if you need this 92, this 81, this 71, this 60, screenshot this. I'll pause it here for a second. I'll talk for a minute and you guys can write these down, whatever you need to do. But I'm also here going to talk about the fundamental side of Tesla, the valuation trackers, how those, compare to the last video I made, because I think that's very important. We're getting down towards these levels that will be buy zones. We're only about 20% away from that first buy zone. So we're getting there. It's just a matter of how far will Tesla go before it bounces. And I'm going to have some faith in these zones. I'm thinking maybe later down the road, adding some in the IRA if we see this 90, but I'm going to have faith in these zones. I believe in them. Let's move the video to the fundamental side of this. You guys can see here that the PE on this is 59, aka 60. Forward PE is 34.5. The PS ratio is 8. The market cap is 597 billion. Now let's go to today. Market cap is 395 billion. PE is 37 or 38. Forward PE is 22.6. PS is 5.2. The PS is very, very nice. I like that we're getting close down to 5. If we can get down below 5, that'll be when we see those buy markers start to hit. Will probably be near 5 or 4 actually. The PE ratio will be actually just fucking almost perfect for a tech stock like Tesla. If we get down into that 90 level, I believe, what would that put it at? Somewhere in the 28 to 26 range, I believe. I'm not a mathematician, so don't quote me on that. But that's where that would put us. The forward PE would also decrease quite a bit. And their debt to equity ratio is nice. Their quick ratio is nice. Let's see if that's changed at all. It has not changed at all. But like I said, guys, Tesla is coming down towards that level. The video was correct. We were right on the thesis of Tesla needs some downside. So we got that downside. The levels have been updated. I wanted to make this video so that you guys could have those levels and you guys weren't buying, when I said buy and then the downside happened much quicker than I expected. So I wanted to keep you guys updated. And I wanted to show you guys that Elon selling his shares is the reason that this is going down mostly. Them shutting down a production plant is another reason why it's going down like this. I wanted just to give you guys that kind of synopsis and keep you guys updated on Tesla and me thinking about taking a position in Tesla in my IRA or, long term, something like that. But thank you guys for tuning into this video. I hope it helped you guys. I'll do these update videos whenever something big happens with a company that I do a buy and hold on. So thank you guys. Have a good week and peace out, guys.